All right, let's take a look ahead at 2026 and the market expectations with Matt Orton, Chief Market Strategist at Raymond James Investment Management. Matt, thanks for joining us today.
Great to see you, Marella.
You see big opportunity for small caps this year in certain sectors or across the board?
That's exactly right. I see a lot of opportunities for smaller companies, just given the fact that their earnings potential, I think, is finally going to be realized. I do think you need to be specific about what you own in small caps. Last year, especially the second half of last year, was one dominated by low quality companies, companies that were more speculative in nature, those that had very, very high short interest moving higher. I think we moved to a higher quality phase of small cap investing, and one where regional banks can do well, given the steepening yield curve that we have to positively impact net interest margins. I think biotech, increased M&A activity can do very well down market cap, and all of the companies just related to, I'd say, reflationary, cyclical reflation, given a lot of the fiscal tailwinds that exist in the overall economy.
Okay, you've been bullish on small caps, you say, since last summer. What sparked your interest in that point, at that period?
It's really an earnings story. So when I look at the underperformance of small caps for really the past 5+ years, the biggest thing has been that both top line and bottom line growth has not exceeded that of large cap companies. It's been a world dominated by the mega cap tech names. And while those names still have a lot of earnings horsepower and strength, we're finally at the point where I think the aggregate earnings across the small cap universe and the top line growth across the small cap universe can finally start to hit, if not exceed, that of the large cap space. And given how out of favor it is, how under-owned it is, if you add earnings to that story, I think that really sets up smaller companies to do quite well. Again, the key is owning the higher quality names that have those growth characteristics within them.
Okay, defense is another sector you like. We're seeing a lot of interest in defense, increased spending, of course, by governments. But you're looking more specifically at robotics in defense. Can you give us an example of that?
Absolutely. So I've been telling clients to play offense or defense, frankly, with defense. And with the advent of artificial intelligence and a lot of investments being made at the national level towards more precision missiles, and especially towards unmanned missiles and unmanned vehicles, look at what's been happening in Ukraine and with Iran. We're seeing that there's a cost imbalance with respect to cheap, low-scale drones being used. That all fits within the robotics segment. And as we move into, I would argue, a more fractured geopolitical landscape, there's a huge investment cycle that needs to take place, not only in the US, but in Europe and in Asia, to get soldiers out of harm's way and use drones to do a lot of the front end fighting. So using drones in fights, using drones to counter other drones, that all fits very squarely in robotics. And I think there's a lot of tailwinds to go when you think of how big that ecosystem is, from the optics to the to actual building the muscles of the different robots. So there's a lot of different ways you can play that theme.
Okay. Are you looking just at the U.S. as far as the robotics and defense, or are you looking outside as well?
It is a global theme, Morella. So the U.S., I think, has been at the forefront a lot of this development, but you're seeing it happen in Europe. There's a number of European companies who are adapting and investing in robotics. There's also companies in Australia, in Japan, and Korea that I think are at the forefront of robotics. So there's a lot of opportunities to play this from a global scale, and also look at the suppliers. So there's a very diverse supply chain, and the supply chain of who's actually providing the inputs to make the end product, that is very much global in nature as well.
Okay, let's talk about AI. You are now moving away from the straight AI play to firms adopting it. Who's going to benefit from using AI? Does that include financials for you?
It does. Financials have been some of the heaviest investors in finding ways to integrate AI into what they do. There's also a huge case to be used for security within that as well, given, personal identifiable information. And so when you think about the growth of AI in companies where you're seeing continued investment, financials hit the list, but also think about transports, think about companies that rely more on data and crunching. The consultancy field, I think, is ripe for disruption with respect to artificial intelligence being used and adopted more in what they're doing. So there's a lot of parts of this economy where I expect over the next 12 to 24 months, you're going to see a lot more paid instances and a lot more of a push from the top, from management teams, trying to ensure that their workers are integrating AI into what they're doing to increase overall productivity. And you're already seeing that play out. Some of the GDP numbers for the US, productivity continues to support strong and resilient GDP growth here.
Okay. Are you expecting to see more of that in the current earnings season, the results of using AI to increase efficiency?
I think it's going to be a story that grows throughout this year. So while we saw some of it come from financial companies in this past quarter, but I think it's going to be more prevalent as we move later into this year, just because there's so many systems that continue to get upgraded. And I think we're also going to get a better sense, Morella, of who the winners and losers might be within the people who are providing a lot of the applications within the AI world as well. So we'll see who's signing big contracts to help actually let these companies enable users within artificial intelligence.
Okay, Matt Orton, sir, going to leave it there, but thank you for your time. Have a good weekend.